Good afternoon. It's Dustin with Highway 1 Capital on it's about 2:30 on June 29th. Getting ready to wrap up the quarter here. The equity markets were up pretty big today with the Dow up over 300. The S&P was up 86 and the Nasdaq was up 522 points. So very strong day with the news over the weekend. Hopefully we get some continued peace over in the Middle East. But we're wrapping up a very strong quarter for equities. The S&P's up over 12% with 1 day left in the quarter, and despite a lot of global headlines, the war, inflation, oil prices, elevated asset values. I mean, there's a lot of negative headlines out there, and the market keeps going higher. So, just as Tim and I have mentioned for a long time here on these weekly calls, we've been, at least for the whole year, we've been constructive on risk assets and believe that we would be rewarded for taking risk, and that's been the case. So we see that continuing. There has been a lot of talk recently. We've mentioned this on a few of the videos in the past. There's a lot of talk about this irrational exuberance, or people overly optimistic on equity markets. Starting to hear a lot of the bears come out and build a pretty strong case. But as Tim and I have mentioned, valuations are clearly elevated, and but we continue to remain constructive on risk assets. But there's clearly pockets of valuations that are concerning, and while stock market enthusiasm has increased, we really don't believe it's crossed the threshold to outright irrational exuberance. Having said that, one area of concern that we're taking note of is the record margin debt on investment portfolios. That's clearly something that we're keeping track of because it's growing rapidly. The two themes that continue to drive momentum and provide growth to the economy and strengthen the fundamental case that people talk about for equities remains artificial intelligence and the need to spend there, and also the spending on national security and defense, and both of those spending are less reliant on interest rates and cost of capital. So that's why we're seeing we think the fundamentals remain strong. Both oil prices and interest rates have settled down, mainly because of some of the peace deals with Iran. Oil's down to it was just over $70 today, got down into the 60s. We're right at $70, and the 10-year Treasury's down to 4.37. So, it's as we've mentioned several times, our base case has been 4 to 4.5% this year. We did break that, but now we're back comfortably in the kind of the middle of that zone. But clearly, both the oil prices and interest rates, remain dependent on some level of stability in the Middle East. But we are off to a very good start for this short week. And as a reminder, the market is closed on Friday. We have a short day in the bond market on Thursday, and then all the markets are closed on Friday in celebration of Independence Day. It's a day that is really valued immensely by us here at Highway 1 Capital as we celebrate really the extraordinary blessing of living in this country where we really have the freedom to pursue greatness, and or to not pursue it if that's what you choose. But a lot of freedoms in this country. I know that I a lot of times take them for granted because we've always had them. But just a time to pause and give a lot of thanks to all those that everything that's gone into to our independence and our freedom and all those who have sacrificed for years for our right for all of us to live in freedom. So we're looking forward to this special day, and we want to thank all of you for allowing us to be part of your journey with you, and we wish you and all your families a wonderful 4th of July weekend, and we'll talk next week.